Hey, everybody. Glad everybody can join us again for another session with us doing this. Something I enjoy doing every week, every month. It seems like every week because I'm doing podcasts now. So it's my folks have got me doing video everywhere all the time. But today we put out and talking about cybersecurity insurance. And so what I wanted to do, because all kinds of stuff going on today, is I wanted to bring on one of our partners. He's actually our channel manager, John Reith with DataStream. John, why don't you introduce yourself real quick?
Yeah, absolutely. Thanks for having me on, Wayne. Always a pleasure to hop on and chat with an audience. My name is John Reith. I'm the channel manager over here at DataStream Cyber Insurance. So I work with great folks like Wayne to make sure that their customers are both educated and know how to navigate the current cyber insurance space. When ready to do that shopping, we also assist with that.
Sounds wonderful. So what we're going to do today is, obviously, I put out some other posts. There's been a lot of ransomware attacks here lately. Some pretty major ones, obviously. Of course, everybody's heard about CDK Global, and they're one of the two largest platforms for auto dealerships, and it brought down a lot of people, and a lot of money's been paid out in ransomware. So what I want to do is revisit this. We was kind of planning on doing this anyway, but we'll revisit. And for everyone out there, I want to cover, some of the myths about cybersecurity insurance, what you hear, comes like that. What does cybersecurity insurance, underwriters, what are they really looking at? What it requires to be able to get a policy, but not only get a policy, but get a policy that really is sized appropriately. What is that? We'll go through some of those type of topics and stuff because those are probably some of the main things we see. People undervalued. They get a policy that's undervalued. To get a policy that they're paying a lot of money for, but still don't cover you right. Just because you're paying a lot of money doesn't mean it's right. How do we go through and really understand how should I size a policy? What things are going to be in place? And, things about you hear, hey, if you got this, you're going to save a bunch of money. There's a little bit of ambiguity about that, about what that really means. But there's ways you get value, better value. You could save money. It just all depends on what you're doing and doing it right. So we'll go through those type of things. Sound like a winner? So, once you add a little background on Data Stream Insurance there, John, I want to give you a little bit more detail about the company, where it's coming from, what y'all really focus on.
Yeah, absolutely. So just to give everybody a little bit of an idea, also of where some of the data that you're about to see is coming from. That's the other point I want to make with this slide. But just to give a little insight and background on DataStream, we are an expert cyber insurance brokerage. We work with virtually the entire cyber insurance market at this point. It's about 40 plus insurance carriers that we do work with. And just like mentioned earlier, we're really here to help customers really navigate what is currently an unstandardized market space, right? And we'll talk a bit more about that later, but basically every carrier is offering their own version of cyber insurance and have their own requirements and costs involved with that, right? And as mentioned, all the kind of data, or at least a lot of it, if not, it is mentioned in the slide, but the data we're going to be touching on, a lot of it comes from our parent company. This is something that really distinguishes us out there. Our parent company gives us a real unique insight. They're actually one of the largest reinsurers globally, and they sit on 90% of the global cyber insurance data. So obviously giving us a particular, set of data to look at when we're going out and helping our customers.
Sounds good. Well, what we're seeing out there is a lot of stuff that we looked at about how does it affect not only the SMB market, mid market, or even the big guys. One of the things that some of this data looks at is how's that cybersecurity insurance coming in there? What does it look like breaches? Who's the biggest targets and things of this nature? And people's always heard me say, I don't care if you're a sole proprietor all the way up to the big guys. You know, a lot of people think the big guys are always the ones that's getting attacked because that's where the most money's at. And that's actually kind of reverse because I kind of explain it. I like to explain it more like think of a reverse pyramid. Okay. Uh, if I can get one and that one has three customers, and I can go get those three, and then those three have three, then I've got nine, then I got 27, and it just keeps evolving. If you look at it, that's kind of how a lot of the actual cyber hackers and things look at it is if I can get one, then I can get more. Just because you might not have a lot of money, I'll get whatever money you have, but I want that bigger client base and keep getting those connections. Was it 6 degrees of separation type of thing,
Yeah.
right? But what we find is, I think people have to understand is some of the metrics about when you get hit and how many actually do. You know, 61% last year in 2023 got hit. That's a large number. Think about that. 61% of small businesses out there, and small businesses make up 80% of the employment market. That has a major impact, right? And I
Yeah.
don't think a lot of people think about it that way. But the average cost, this actually caught my eye. This was higher than I actually thought it was going to be. 3.3 million under 500 employees.
Yeah. Yeah, scary
That's
number too, and
yeah,
it's really a testament. I'm glad you pointed this one out specifically because it is a testament to how messy these incidents can get and how the fees and the costs can really just start building on each other.
over the last 3 years. Because really it's been a real focus. This probably I'd say the last 3 years has really had some intense focus. What have y'all seen at these type of numbers? Is it very consistent, or is it vary in scale?
Yeah, it is going to be varied in scale, right? Insurance is often a bell curve, right, where you will have these kind of wide variations, especially in cyber insurance when you have industry playing such a large factor, right? Depending on your industry, a healthcare type company, and these guys are sitting on a lot of sensitive data, right? So there is going to be wide variation in there. And actually, one of my favorite slides is coming up that kind of shows, though, the breakdown in terms of size as well that I'm excited to dive into here kind of explains that very question a little bit more as
Yeah,
well.
the when I some of the research I've done, it talks about the tax and what happens after it. 10% go out of business, 25 bankruptcy, and there's when you look at it overall from the FBI, when you looked at it, over 60% of the 61% never survive longer than a year. They're out of business within a year.
Oh,
you know, because that portion of it, they didn't have the right things in place to try to help them overcome that. And it's sad to see. And one of the things that happens a lot in these vectors is kind of like what happened to CDK Global. They got hit. They got hit. They go into recovery mode and they get hit again during their recovery mode.
that was exactly what I was going to point out is the chances vastly go up. Also, it's the other thing people don't think about is it's not about just getting hit the one time. It's your chances of getting hit again that, drastically go up because these bad actors they often leave a back door somewhere, right? They'll take you through this whole incident, this whole ransomware thing, and they'll say, oh yeah, we give you all your stuff back, but they'll leave a little door, a little something, to find their way
Well,
back
where
in.
my brain went right off the bat? I'm going, well, they were already in the backup. So when they went to recovery mode, they were just putting it right back. So that tells me part of their security posture didn't account for that. Immutable storage and things of that nature that you go off and do to make sure you have that image is protected. So that kind of stuff goes on. And just to let you know, I see questions popping up, and as they pop up, we'll address them. I'll work them into this. So we're not going to wait to the end. I'll kind of work them in. And when we talk those questions that comes up, when we talk about them, there's a little bit of delay. There's about a 15-second delay. So when a question comes up, we will answer the question. We'll kind of linger a little bit there to give you a chance to come back. But if we keep moving, I promise we'll come back to you. So I want to get just a couple more slides in this before we jump into those things. So, why are SMBs targeted? One of the things is kind of what we went into. It's, you know, SMBs, how much, what they go in. Typically, they're so focused on business, they're growing a business, they're doing these things, and putting these cyber postures in place and maintaining them because it's not a one-time thing. You got to put it in, and it's always evolving. So you're going to have that ongoing monitoring and management of it. So that typically what gets in there. And in the past, solutions to do it have been very expensive. If you didn't have the budget to do it, but That's one thing we focus on to try to make it extremely affordable to give the same level of protection we give to enterprise all the way down to sole proprietors. So we even got sole proprietors that couldn't get insurance. We got them the security stack in there, and now they're able to get a policy because they got the things in place. So one of the things I want to make sure people understand is there's ways you can do this, and it's affordable. So don't just automatic discount. I can't do it, so I'm just gonna take my chances type thing there. So the big affordability one was the biggest one right there. I mean, what other things have you seen is, why they're targeted and what some of the biggest myths are that you're
Yeah.
hearing from the
Yeah.
insurance side of it?
And this was the real kind of shift, during, the pandemic period, a lot of folks, started working from home, and it really opened the doors for a lot of these guys to start targeting the smaller businesses. And during that period is when they started realizing it's actually more financially viable for them to go after, thousands of smaller guys versus making the really extravagant attack for a single big guy.
Mm-hmm.
Because they found a lot of these smaller guys weren't taking their cybersecurity super seriously, and they also, just like the bigger guys, they still often had like data, right, that was important,
Oh yeah.
or they were a business that couldn't afford to be down. And both of these two factors were what really led into what everybody's heard nowadays, which is ransomware, right? If they can get in, steal any sort of sensitive data that they don't want, that can't afford to be public, obviously that can be ransomed. And if you're a business that can't afford to be down or is supposed to be open during certain periods of the day, right, they could shut you down and then ransom you for that, right? So those were the two really largest things that fed into ransomware, which is really obviously this huge thorn in a lot of folks' side. And then, of course, there's still that money there too. They're still doing that fraudulent. People might have heard of the fraudulent transfer, where you're pretending to be an
Mm-hmm.
email and getting you to wire transfer, to a new account instead of your vendor that you're used to transferring money to. All that is still happening, but those two factors were really what fed into what's costing the most to the
Yeah.
smaller guys.
I think one of the things that I like to focus on too is for many years when we talk about personal identifying information, PII. Well,
Mm.
everybody typically equates that to social security number, credit card numbers, bank account numbers, and all this. But social media has really changed the definition of PII because I even see insurance policies where they come in and they ask, about, you know, do you have what data, PII information, do you have? Where is it? And how's it protected? Now, okay, first you start thinking, okay, I got to look at my file shares, I got to look at all this. But over time, one of the policies I saw had 35 different areas they specifically called out that they wanted to know if you had PII in. And one of them was the browser cache.
Yeah. Yeah.
So right off the bat, everybody's going to be thinking, well, why would browser cache have anything to do it? And it's one of the things that kind of drives me crazy. You should never do, but everybody really, people don't realize it, do it. And that's save your passwords in your browser
Yep.
because browsers make it easy to go
Yep.
do that. Only problem is that's the easiest place for me to go get your information from. you know, but now it's defined out even more. And even so, it's not even where I need a password. But if I can go get your name, where you live,
Exactly.
what social media accounts you have, coming in that. Now I can go look at that, see how you socialize, and I see where social engineering is going reversing. Hey, calling the bank, I lost my husband's gone, I've lost all this, getting this, or my wife's, she's traveling, I need to get an account, I don't know the passwords, and they talk them through and they get it.
Yep. Yeah. And that's
It's
exactly why, yeah, you're seeing even, yeah, these carriers are having almost an evolving perspective on what is considered like the valuable, what is PII even, right?
right.
Especially in this cyber world, right?
Mm-hmm.
What does your cyber PII look like as well, right? Yep. All things. Yep.
Starting to get a lot of good questions, and some of it's coming in,
Yeah.
about pricing and premiums and all that. So they're ready to get to the meat. I like that.
I
So
love it. I love it.
we're gonna come around to
We're
that.
coming up on it. Yep.
Yeah, we're coming up to it pretty quick. So we're gonna keep going here.
Absolutely.
So looking at it from a standpoint, easy targets, what is it people don't have, in that. Now, still in this number here, and you looked at, still, if you go read what FBI has to say, 90% of all intrusions start with the lack of training.
Yeah.
Now, to me, that's half of the statement. So you can do SAT training, security awareness training. You can go do the videos, you can do it. But if you don't practice it, how do you know you understood the information? So, I heard people like, hey, we got the security awareness training, or they're doing the training and all that. They say, hey, they're doing hits, but we still got hit. They clicked on this link, and I'm like, okay, did you do any of the simulation testing to make sure whether you can catch somebody doing it or not, so you can re-educate them because maybe they didn't understand it? Well, no, we didn't do that. Well, why aren't you doing that? Because that's the second half of what you do. Well, they get irritated when I do it, and I went, okay, here's a question for you. Would you rather have them irritated because they're having to do a simulation, or would you rather get hacked? Right?
Yeah,
It
and
comes into that.
human error, right? That's always always going to be a factor. And if you look at any of the data coming out, it's at the top of the list in terms of factors that lead to an incident, right? And humans are humans. We're always going to be humans. And so training and truly, and just like Wayne is saying, not only training but practicing, putting into practice, your training. It's really about developing a culture, right? A cybersecurity culture, and educating your customers, or
So
excuse me, your employees on that.
I'm gonna start asking some of the questions because
Yeah,
they're gonna
let's
roll
roll
off
through.
my screen. I'm gonna have to
Yeah,
scroll
yeah,
back a little bit. So let's take the first one from Lois here. She kind of got a two thing here, but she wanted to find out, you know, clients that were not able to attend. She wanted to get this in, so make sure it's in the replay. And so what he wanted to ask was, how often should a policy be reviewed or updated? And what happens if your cybersecurity posture improves or changes during the policy period? Oh, that's a great question.
yeah, yeah.
So
It's a
you want to take
great
those
question.
two and
Yeah,
we'll
yeah,
let
yeah.
that run?
Let me tackle both of these actually. Great question. So policy is going to be an annual policy, and it actually gives you a nice, basically annual checkup. Once a year, you're going to have to renew your policy. At that time, the carrier themselves will be informing you of any changes going on in the policy, anything like that. It's at that time I typically recommend, if you are seeing any drastic changes to your policy, to kind of double check with the market. That's where somebody like an expert like DataStream can come in to help you go shop and check out what other options might exist out there for you come your renewal time. So yeah, at least once a year, I highly recommend just double checking with the market, poking your nose back out there, especially if you're seeing a lot of changes come your policy renewal. And then what happens if your posture improves? That will, and we're going to dive into this a little
Yes,
bit
we are.
deeper, but just to touch on it briefly, it depends on the carrier. And we'll dive into that a little bit more. But again, unstandardized market. So right now, it's going to completely depend on the carrier itself.
So let's take one more because it's going to be kind of coming up into this here. But I believe another one, Gerard asked, how are premiums calculated and what factors influence pricing?
Yeah, absolutely. And this is going to be a couple slides we're coming up on. We'll
Yep.
dive into deeper, but it's a good thing to touch on even early on. The two largest factors when a customer, anybody comes up to a carrier applying for cyber insurance, they're going to be looking at your size based off of your estimated annual revenue. Because one of the largest coverages is business interruption. So they want to know how much of that revenue they might be covering for you during your downtime. And then the other factor we've already kind of touched on is going to be industry, right? Just because of that wide variation that you could see in terms of the risk behind each industry. And so
It's like
those are going to be two largest factors, and we'll dive into kind of the rest
we
in this
deal with a
next
lot
portion
of
of it.
finance. So I do banking and there. So obviously, they're kind of like on the medical side. The premiums can be interesting to
Yeah.
calculate on that based on size of banks,
And
all that kind
again,
of stuff.
unstandardized. So every
Right.
carrier is technically looking at everybody slightly different and has got their own. Some carriers are even more focused on certain industries or certain sizes. All of that comes into play. It's one of the reasons we still work with the vast majority of the market, because you really, as a customer, want to go out and apply to as much of the market as you can right now so that you are getting as many options and finding the best
Okay.
from those.
So let's do a couple more slides here, and we'll get a little bit deeper into some of these questions here. So this was an interesting thing you supplied here, John, talking about this data set, and I guess this come from your parent company that you pulled this information from is, but talking about size of claims and loss based on employee count.
Yeah.
And just because, and when I look at this, if you look at the numbers, 393 of 0 to 10 employee size company is almost as many as 251 to 500 companies.
Yeah, and the real what I want everybody to also focus in on is the dollars and cents, right? Because I believe we tried to take a fairly kind of even in terms of numbers of claims. So that's going to be relatively even, but still what's important to look at is the averages, right? Is to look and realize that if you're a 0 to 10 employee count, the answer is not zero, right?
Right.
In the terms of dollars and cents is not that low either, right? Obviously, it does start to increase as you grow, but an average claim loss. Can you, as a small business, even afford a $131,000 hit? Let alone the worst case
Mm-hmm.
scenario at $10 million hit,
Right.
right? That's the thing I want people to realize is this idea that you are too small, right, to have a really insane attack that ends up costing millions of dollars, is untrue, right?
Yep.
It's just happening across the board at all sizes.
So let's get into a little bit of how do we start solving these, and obviously this is going to help get into some of the other questions I have here. So
Yeah.
when you look at this and we talk about it's simple to say, reduce risk. So what does that mean? In reducing risk from a cybersecurity insurance perspective. Okay, because I can talk about risk all day, dealing, from every aspect. But let's talk very specifically. And this kind of goes into the questionnaires because we see questionnaires coming from different underwriters. One that's a single page. So I think the largest one I did was like 130 pages.
Jeez. Yeah.
When I saw it, I was like, okay, this is nuts, right? But everybody's got their own process. Like you said, unregulated. There's no standard question. I get asked question. Is there a standard question list you can get that insurance company going to look for? No, not really, but I can tell you the target areas that they're going to ask the questions about. And lots of times the questions get asked, they're duplicated throughout the whole document. You might get asked the same question with a little variance 1,500 times, right?
Yeah.
Um, but from what y'all's perspective in looking at this, what do we mean by reducing risk from a cybersecurity underwriter standpoint?
Yeah, absolutely. And I'm glad you brought up that point about the questionnaires too, because it can be tough because a lot of those questions aren't even necessarily moving the bar for them. They're more exploratory questions
Mm-hmm.
for these carriers who are trying to build up their data sets of proving out, okay, all these customers with, we know they have this tool, they saw this percent chance of having an incident, right? So yeah, it can be really tough. So just like Wayne said, it's about getting an understanding of what are those questions that are moving the needle as well. But in terms of solution, yeah, I really love to compare it to other risks we face every day because it's really no different. If we take into consideration the analogy we have here of fire as a risk, right? Step one, you invest in your own resources, right? These are the tools, the technologies that are ultimately going to reduce the overall frequency and severity of an incident, right? So for fire, these are your sprinklers, your smoke alarms, your fire extinguishers, right? That, like mentioned, hopefully help mitigate that situation. But you still have a balance with the investment in collective resources, right? This is where insurance comes into play. Obviously, for fire, this is also things like the fire department. But for things like fire insurance, you actually, especially if you're running a business, might be required even to have some of those tools, right? You're actually going to be required to have like sprinklers, certain a number of fire extinguishers, fire exits marked clearly, right? Things of this nature are actually going to be required in order to obtain fire insurance. And
Mm-hmm.
cyber is no different, right? It's the exact same thing.
So you go into this, what are the basic controls? We talk about basic controls, the cyber plan for failure, having an incident response plan, and system data recovery plan. So one of the things, reason why I like working with you guys is as a partner, y'all come up with this IRP, instant response plan builder. Now, it doesn't go in and say, okay, you use this and now I've got my IRP and I'm done. But it's a great guide. I like using that with my customers because it's a great guide to get the conversation started and going and driving it off. So that's one of the things that it was I really love is that because it also now plans into your data recovery plan. What's happening there? Do you have these things in place? And it all goes back to some of those very crucial questions that are getting asked. So now we're just starting to understand what does a customer have in place? What do they not have in place? And those things start reducing the risk factor,
Yeah,
right? So that's basically
absolutely.
where it comes from. So if we go into that, when you talk about the technology that goes into place and things of that nature, what are those specific areas that we're looking at? And let's equate that what is equivalent to the sprinklers? What is equivalent to the security alarm? What is equivalent to the smoke detector? What are we talking about there from a cyber standpoint?
Yeah, let's jump into the cyber insurance side of things, right? And some of these basics will even dive into how. Also, we do have a slide coming up that will dive into how they're going to affect some of your policies. But these are things like MFA,
Yep.
right?
So we're going to get
Multi-factor
into there. Yep.
authentication, off-site cloud backups. These are some of the basics, and we'll talk about how they can, potentially affect either opening the doors or finding better policies. But yeah, just like Wayne said, I love that. Those are your sprinklers, right? Those are your smoke detectors. These are the things that Wayne is the expert at, right? This is why you lean on him. So let's dive into those differences, though, a little bit in terms
Mm-hmm.
of cyber insurance. And we'll touch just briefly on this slide. It's something, though, I really do want to hammer home because what I'm finding a lot out there is folks are snagging up what is mostly a rider or an add-on or an
Mm-hmm.
endorsement, all synonyms for the same thing, on top of their general or commercial liability. It's either that or they think they have cyber coverage under their general, which was once upon a time actually
Once
the
upon a
case.
time, yes,
Yeah,
that is correct.
once upon a time, you go back, 5, 10 years ago, there actually was some language in
Mm-hmm.
there. But now you will find, if you look again, you're actually going to find exclusionary language in your general
Right.
liability or commercial policies around cyber. So these riders are becoming more and more common, and it's something you really want to look out for because they're both really lacking in the dollars and cents. I think 50 to $250,000, not doing a whole lot, especially if we hit, $1 million, $3 million incident, as we saw a successful data breach can hit. Just not going to cut it. But also the language inside can be really lacking and can be tough to even get the carriers to pay out a claim on these riders sometimes. They're typically maybe 15, 30 pages long versus a very clearly explicit 100-page, maybe 75-page long standalone cyber liability policy. So those are some of the common kind of misconceptions. Every once in a while, I'll get one about tech E&O. The big one about tech and E&O in general to remember out there is that it is really designed to protect you from yourself, right? Negligence, whoopsie daisies, right? Things that you accidentally did that ended up causing some kind of damage to a customer. Whereas cyber liability is truly designed to protect you against incoming attacks, right? Third parties who are actually trying to attack you.
Right. So in coming in, I'm on one of these. I'm jumping around some of these questions that kind of apply to the slides we're on, so I can kind of get us back on track here because we
Love
kind
it.
of everybody's trying to really get some other pieces
Get
here.
them
But
all answered. Yeah,
um,
absolutely.
let's say in this, and it goes in from a policy standpoint. One of the questions was, does the policy cover incidents involving third-party vendors or service providers?
This is beautiful. This is a perfect segue into the next slide.
Yeah, exactly.
It should be the very next slide if you want to click it. Yep. So here is what and again, unstandardized market, right, everybody?
Right.
So not everybody, not all cyber insurance policies are going to be created equal, but this will give you an idea because a good cyber insurance policy, or at least a quality one, should be very broad and should, yes, indeed, provide what's called third party liability coverage, right? Again, not all of them. So you need to look for the language inside, but a good one will have both first party and third party coverage, right? First party for everybody out there is going to cover you and your immediate self, right? Any damage actually done to yourself, that's what first party liability is referring to. And third party is referring to anybody else that might get damaged in as a result of the incident that started with you, right? So if an incident starts with you and trickles down into your vendors or your customers and they turn around, suing you for damages, that's where third party liability comes in to cover any of those lawsuits, right? It's not going to cover that, customer in terms of stepping in and covering those. It's designed still to protect you from damages, protect you really from the lawsuits against those third parties, right? It's a great argument for everybody having your
What about
own
in the reverse
insurance
of that?
policy.
When you're sitting there and kind of think United Healthcare, where their breach was actually caused by one of their vendors that got breached and it come through that way. How does
Yeah,
that
so
apply to this first party, third party scenario?
Yeah, so if United Healthcare had insurance, cyber insurance, specifically a good quality one with third party liability, they would be the one. Oh, excuse me, let me flip that. If their customer, yeah, had third party liability coverage, United is naturally going to be looking for damages, right? If they had a vendor and that attack leaked in, caused damages, leaked, yeah, probably sensitive data, right? Things of that nature. United Healthcare is going to be turning around looking for damages, right? So that vendor ideally had cyber insurance with third party liability that would have come into play to actually cover those lawsuits as United Healthcare is looking for coverage of those damages,
Well,
right? So
when it
that's how that would
comes,
be done.
well, what we started doing and what we found interesting, because we have a compliance readiness program. So where I got a complete department that goes in and helps people meet compliance control standards and stuff like that, whether it be ISO, whether it be cybersecurity insurance, obviously we do a lot around NIST, several other things. What we started finding, because if you're doing that service with us, we track vendors. We actually generate a questionnaire that goes out to vendor, asking about that cybersecurity posture and all that kind of stuff, putting in there. What we're starting to find out is that a lot of the underwriters and auditors are asking that information. And if you have that, that actually is another step of reducing risk for that level of coverage to help support these type of policies. Is that what you're seeing as well?
Yeah, I would have to double check actually with our agency team. That would be news to me, but it makes sense to me, right? For them, it's all about getting an understanding of the risk, right? For these carriers, that's what it's all about. So the more they can get an understanding, the more data they can get a hold of. That's why,
It's about the
it's
data.
really this balance. You're seeing so much
Right.
difference because some guys are like, let's just get all the data and have a really long questionnaire. And some guys are like, well, we don't want to have that big of an obstacle for our customers. So let's figure out the most data we can ask for without it seeming too in depth of an application.
Or too
So it's
intrusive.
really all about how much data they can gain insight on to build up these actuaries that prove out the risk and ultimately so they can get an understanding of how to set the premiums and all that
So I
good
was
stuff.
thinking there is, let's see, yeah, there was one of the questions also, are there any requirements regarding vendor risk management, which is kind of what the third party piece is going into and applying to right there. Let's see what else we got here. Are there discounts available for implementing specific cybersecurity measures? And we're going to be getting to
We're going to be
that.
getting into that real soon. Yep.
That's coming in there. What else going to see? Are there some of the cybersecurity services that insurance carriers require to be in place? Obviously, we're coming into that as well. What instance will the insurance not cover? Boy, that's a great question.
That's a great question. And in terms of exclusions, you actually really don't see a whole lot. There is the wartime exclusion, but that's in just about every single insurance policy that exists out there. But other than that, again, it will depend on the carrier you're going through and what exclusions they might set. But we
Nation
just,
state.
yeah, exactly.
There's some won't write it for, they'll write you a policy, but they will exclude nation state attacks.
Yeah, yes, yeah, and they will. Again, yeah. It just
That got
depends on
added.
the
I think
policy and
most of
what
that
it's.
happened like towards the end, no, about middle last year is
Yeah.
when that came around, if I remember right.
Yes. Yeah. It was the increase. I believe they saw an increase in like the really organized. I can't remember which country it was, but it was one of the Eastern European ones. I remember it. The nation state one is a very tough one, also for the carriers to prove out in court. I'd have to do some digging on exact data around it, but I know that much. It's been very tough for them to kind of prove out in the court of law. But it also depends on, again, yeah, the carrier that you have and what exclusions they're putting in there. The wartime one is the one that you'll see pretty much across the board.
Right.
After that, yeah, the nation state one will be another common one, and then after that, it will start getting into the coverages themselves, like all
Right.
those coverages that were on that last page. You'll start seeing exclusions maybe around those, right, as you kind of move down. And it's a perfect segue actually into this slide right here. So
Mm-hmm.
what you're seeing is a bit of a tiered market, right? So at the top of the carrier list, you can imagine the best quality carriers offering the best policies at the best pricing, but are also the ones who kind of naturally have more requirements, right? They're the ones asking more from their customers. And you can naturally kind of move down that list, but just like we were talking about, you might start to see exclusions pop up, right? You might not have ransomware. That might be an exclusion they actually put in there, is they just won't cover ransomware coverage, right? That's actually a kind of common one we'll see as you move down that tier list.
One thing's interesting in this slide, and it's something I talk about all the time. Is I learned when I first met you guys is, but in your cybersecurity insurance, when you look at your policy, always make sure that it's pay on behalf. And
Yeah.
when people would look and say, "What do you mean pay on behalf?" I said, "Well, it comes into it. If you look at the policy, if it doesn't say that, that means you got to pay out of your pocket, then go get reimbursed."
Yeah.
Okay.
Yeah.
And, depending on the scenario, do you have that much cash laying around? You know, depending on the scenario versus what you come into is pay on behalf. That means the insurance company is going to pay directly,
Yeah.
and it's not coming out of your coffers right off the bat type
Not
thing.
to
So
not to mention the time and effort you're gonna have to
time,
put
effort,
into
and
getting
everything
that
else.
carrier to reimburse you, the emails back
Right.
and forth. When am I gonna get reimbursed? Well, I need more
Yep.
documentation. Back and forth. Yeah. So yeah, how easy do you want your claim process to be? And then yes, dollars and cents,
Yep.
right? Uh, uh, let's get into a bit of the meat of it. What a lot
Because
of
this is
folks
going
want.
to be what's a good policy cost and all that. So we're finally getting there.
Exactly. I like to touch on what does a good policy look like. And Gerard, I see had a question. Yes, we kind of cruised over what is covered in a policy a little quickly, just because there is a lot that goes on in there. Absolutely, the cost of getting your business operating again, including bricking costs, loss of earning, digital asset damage, those things are all covered again in a high quality cyber insurance policy. It's another reason to get, if you do have a current policy, get your policy reviewed if you haven't done
Mhm.
so yet. Have it reviewed for free. I can very quickly
Yep.
go through and let you know if your policy has those coverages. But a good one absolutely will have those coverages. And so when we're looking at the cost of one of those good policies, uh, it's typically, and again, the most common policy sold to the space is $1 million policy, and this is the smaller guys. We've seen the numbers, so it's not necessarily crazy. And in terms of pricing, it's not typically crazy. So think in between the $1,500, $8,000 range for your premiums. Again, if you're drastically higher than that, definitely come talk with us about it, right? And then deductibles, right? You want to see kind of in that similar ballpark, 2,500, 10,000. And again, hammering it on that pay on behalf versus reimbursement. Another thing I always like to point out is working with an expert can make sure that you're finding the best pricing that you can, right? So 70% of companies that apply for quotes with us and our platform end up getting offered $1 million policies in between $900 and $2,600, right? So it's just a testament to
And
what it
that's an
looks
annual
like.
price.
And that's an annual price. Thank you. Yes, absolutely. That's yearly. Exactly. And again, yeah, so cyber insurance is done in an annual rotation. Yeah.
Okay. All righty. So now we get into what
There
they're
we go.
saying. What things do you get in place to help get a good policy? So,
Another question.
and this is the area we play a lot in where it comes in. This is kind of that relationship works because when we talk about the policies, which you guys analyzed my policy. When we first got up, I sent them my policy. They analyzed it. They went through it with a fine tooth comb, and actually, I got a report back saying, "Hey, you actually did a good job, Wayne." And it's like, cool. But they did find out something. Hey, make sure in your documentation that you're meeting the documentation requirement that was spelled out specifically in the document. Now, I bring that up because a lot of people will tell me, "Hey, I got my policy. Hey, my agent would have told me if I need to do any special." I'm like, typically the agent that's selling you this doesn't understand the requirements of a cybersecurity insurance policy. They get the numbers. Here it is. Here you go. Close it. That's what they're doing. They're not the underwriter. They're not the person that understands all the requirements of the policy. So that's one of these things. Doesn't cost you anything. I highly recommend we get you. Just as part of this, you send me an email. I got a secure system. You can send your policy to me. We'll get it in, have an actual review, and then actually get John and his team actually on a call, and we'll take you through it and review it, show you exactly where you're sitting at, what the policy does and don't do. That way you know. So it's definitely worth your time there. But we get
Absolutely.
into this and we start. I get asked questions all the time. Okay, what does I need to do to where I can get cybersecurity insurance? What do I need to do that's going to mitigate the risk? So therefore, I get a policy that I can afford, but yet does what I want to do. Okay, and we hear about discounts and all this, but what I've learned is we had a customer, sole proprietor, CPA, couldn't get insurance. So we went in and actually did put the things in place like what we're talking about here. We actually got her a very affordable solution to her as a single proprietor. And now she got cybersecurity insurance policy that was sized appropriately for her. And it's cost her $89 a month.
Yeah.
And she was ecstatic,
Yeah.
you know,
Yeah.
because it was no one would talk to her to where
Before.
she got a great policy that was sized appropriately, and the pricing was way
That's
more
right.
affordable than she ever thought it would be. So, can you get affordable policy that does the job? Yes, if you put the right things in place to go do it.
Yeah, 100%. And then, and these are just a handful that everybody's seeing
Mm-hmm.
here. These are kind of, you can kind of see them as the top four if you want to, but there are others, right? And we even have a checklist, and
Mm-hmm.
our application will help you out with a bit of a gap analysis to inform you of those, especially those tools that are really going to move the needle, right? You can imagine it again. Every carrier technically has their own requirements, their own list of requirements,
Yep.
and it is more about checking boxes right now, right? And just like Wayne said with his customer, they weren't checking those boxes for anybody, and so nobody was offering them. They were not willing to offer them any sort of quotes until Wayne actually came in and started implementing some of those tools and technologies. And that's what a couple of them that you're seeing here, right? And this is just an example. Again, there are others, but especially offsite and cloud backups, right? MFA, those are two of the biggest ones, right? Without those in place, it's going to be very difficult, if not impossible, to even start getting quotes back from carriers. And EDR and employee awareness training specifically going to be looked for by those carriers up at the top, right? Those guys who are offering the best policies, the most broad policies in terms of coverage, as well as the best in terms of pricing. Those guys are going to be looking for that. And then also specific industries will often be required things like EDR, like I believe healthcare is one of those, right? Where they're
Oh,
really
healthcare,
going to need you.
finance,
Yeah, they're
a
going to need
lot
you
of
to
the
have
industry
EDR.
now, it's even from their on industry compliance requirements. It's
Yeah,
mandatory for a lot of these different things.
yeah,
But also, as every August, FTC is coming out with something new,
yep,
and it's coming out. And we just saw that even from a standpoint of these things, if you're doing business in New York, now it's a requirement from New York. In New York, you have to have a VSO or either a CISO on staff or a virtual CISO service. It's required now.
really,
Yeah,
yeah, I
that
believe
just
it.
come out.
Yeah,
We learned that one of our customers. We're helping the insurance company. We're actually doing the stuff for the insurance company compliance so they can do things uh, to meet certain things. Because he's doing business in New York, they have to have visa. So as you come into these, we're seeing the same thing in the insurance where it said, hey, we recommend having a password management tool. It's just a recommendation. But now, because of what's going on, now it's becoming more of a requirement in cybersecurity statutes and coming in there. So we're starting to see those things change. Every 6 to 12 months, we're seeing a new requirement. What used to be recommended now is becoming requirements. So that's the problem we got right now for everybody to stay up on it. It's evolving
Yeah.
as we speak. So it's not one of these set it and forget it. You got to have a way to make sure you got these things in place. Are they meeting it? What else needs to be happening?
It
And
is
that's
the
one of the things
unique,
that we have our CISO monitoring all the time. What's
yeah.
changing?
And it is the unique part about cyber as a risk specifically, right?
Right.
If we think about, fire and those other ones, typically you don't also have, fire constantly or somebody constantly like testing all your, like trying to light things on fire around, like you do in the cyber world, where you constantly have people testing the tools that you have in play, like trying to break your tools constantly, right? That's actually something that does separate cyber, and it does make it different and more complex, right? It
Right.
is why we are seeing this confusion, and it's a reason I actually built this slide right here, right? Because it really is the confusion right now across the board. We are obviously heading into a direction where these carriers will have a better understanding of the tools and be offering like really clear discounting. We're just not there yet. As I mentioned, it's really about these closed or open doors. And the way I like to explain it to folks is imagine you have these three areas and you get to choose two of the three, right? You can either go for a carrier that has, fewer requirements for sure, but it does mean you're going to be sacrificing one of the other two options here, right? Whether it means the cost goes up through the roof, or as we've talked about before, some of those areas of coverage start disappearing, right? Or getting aggressive sublimits on top of it. So obviously what we recommend is going for the best coverage we can find out there, but balancing that obviously with the best cost out there, right?
Well,
Trying to
what I'm
find out
seeing
based on
into
your
this,
individual risk. Mhm.
how I see it, and what I've been experiencing is, and it could be, where some people tout, well, I got a discount, but what really happened is because they had such a good security posture, they were giving a better policy for the
Yeah,
price of someone else's so-so policy. So basically, what they did was they got more capabilities in the policy for the same price, but it was just a better policy. The coverage was better, the amount of coverage was better, and all this for
yeah.
that price. So yes, you can look that as a discount, but that's not. It's not really okay. You do this, I'll get a 20% discount. That's not how it's actually working.
Exactly, right. Yeah,
Right.
exactly. And it really is about the balance between these three as well, right? That's what I
Mm-hmm.
always tell customers. We want to figure out what makes the most sense for you as a company in terms of those, how many of those tool check boxes can we check off that makes most sense in your budget? Because obviously, the more of those boxes we check, it just opens up the door to better and better policies, right? So it is
Yep.
about working through that balance. What makes the most sense for your individual company in terms of risk, right? What tools do make the most sense? Let's get those in place to see how much of the market it opens up.
Another way of looking at that, and when you're coming into it, if a policy is giving you more coverage for the same price, that what basically that tells you is they perceive you as less risk.
Yeah,
So they're going to give you more for the same price, and doing that because you've done these other things, so they're willing to cover more situations. I think one of the questions was, what all is covered, what's not covered. Well, sometimes things that one policy will cover and one customer got, it got covered because they have the right things in place, whereas another one that didn't have it in place, it's not covered, it's not in the policy, it's not written. So there's and that's part of the unstructured, unregulated scenario. Is it's kind of like the wild wild west.
yeah,
So either you're the fastest gun and top dog because you're doing the thing and the practice and everything to be that top gun, or you're Jethro out there and you're just a sitting target, right? It's
yeah,
it's really what you put into it and what helps see that mitigated risk in coming into it. And that's how we're seeing that. And yes, can I construe that as a discount? Yeah, I can if I want to, but that's not really what's happening.
yeah.
It's
Yeah,
they're giving you
it's
more
you.
because
Will
you
you
you've
get
got less
can
risk.
you Yeah, can you get credit, for doing the
Yep.
right things? And are there
Yes.
carriers out there who will give you credit for
Yes.
doing at having a
Mhm.
certain tool in place and another one won't? Exactly. But
Yeah.
it's not quite so much like, oh, it's this tool is going to give you a 20% discount on cyber insurance, and we know that for a fact, right? It'll get there eventually, but insurance world moves at a snail's
So
pace.
this kind of slide, I was been holding off this question. One of the questions out here was, let me see where I find it here, because it had, have you had a claim against a cyber insurance policy in the past, and how was it resolved and downtime? So one of the things I'll go into there, my dog is going nuts wanting in here. You're just gonna have to wait. Sorry, everybody. We actually had a credit union that we had our security stack in and going doing this, and our SOC gave me a call. This is like on a Saturday evening, going, "Hey, we're seeing something not right happening here, and we haven't been able to get a hold of the customer." So I call the customer and comes in, and it was actually having a nation state attack. And we caught it coming in there before they could do anything, and it was because something didn't get patched. One of the environments that he was controlling that needed to be patched, he didn't put the appropriate patch into it. So our security caught them coming into it, and of course we had to go and generate all the data and put all that out and get the FBI involved and all this kind of stuff. The insurance got involved and all that. But even though they didn't get shut down, we had to go and recover. We was able to do it and get them. We called them at zero day and isolated them. We still had to go through the whole process of the reporting, sitting with the breach coach, doing all this, going through that. It was an interesting exercise. Is go off and do that. So my point about that is, even though we had everything right, got it in there, still took some man hours. So that instant response plan, that recovery plan, the communication, to me, the instant response, the first part of it in the instant response is communication. You know, the NIST framework and all that, the big thing they talked about, the 2.0 version that just come out. If you notice, they took and brought a new piece in front. It's called governance, and they split that out of identify, because, and if you look at governance, it's all about the communication workflow, the information workflow. So putting those things in there, if we hadn't had that in communication and be able to go through the process, then that would have created a bigger thing. But the insurance provider with that customer, you would think, okay, they got hit and all this, their rates are going to go up and all this. Actually, it didn't. They got treated very well because we had the things in place, caught it, showed the due diligence, reported it appropriately. Everything was
That's
good.
amazing.
You know,
That is amazing. That
but
is
if you
an
didn't have
incredible,
that things
especially
in
right now.
place, what happens going into it? That creates a big problem. You know, so going into there, and it kind of feeds this, but go into the things that get you denied. And I bring in that breach coach for a very specific reason into this kind of this conversation.
Yeah, yeah. And this is what it's one of the reasons I like to end on here, right? It's obviously definitely a stigma. I think I see a lot in the cyber insurance space. For a couple of good reasons, I think it is a complex world. It is a complex space. So it's not like necessarily as easy. It's also not standardized, right? So it is different from carrier to carrier, but ideally, in terms of ensuring that your claim is not denied, uh, you really got to understand how claims are or why claims are being denied right now. And this coming in from two real main avenues. One is a big one that Wayne kind of already talked about earlier, which is as you're filling out those applications, you really want to make sure you're filling them out accurately, right? And we have run into folks who have just gone through, checking those boxes, yes, 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 because they think, that's what they need to do in order to actually get the insurance. When we've already talked about even that some of those questions aren't even actually going to move the needle anyway. So it really is important to go through, answer those questions, work with an expert, work with an IT expert like Wayne, to actually go through, make sure those questions are answered as accurately as possible. And then the second one we already kind of touched on, which is the riders, the add-ons, those endorsements on top of your general liability policy. We've already mentioned the language is typically very lacking, and so come claim time, it can be a real battle trying to even get them to pay out on your $50,000 rider. And so that's another big one. I just tell people right away. I mean, it can't, it can work out, but that's where we're seeing like the two big avenues in terms of claims denials coming in. The carriers figure out a way to kind of wiggle their way out of those riders or add-ons. So how do you avoid that? Well, obviously, number one, we're not relying on those add-ons, riders, or endorsements, right? And then number two, like we already talked about, working with an expert to actually correctly fill out those initial applications. Number three is what Wayne was talking about as well, is keeping good records, right? Because just like we were discussing, the carrier is going to do their due diligence come claim time. They're going to come in. They want you to have a conversation with a breach coach, and they want to really make sure that you were doing the things you said you were doing when you applied, right? Because they're taking on your risk with the assumption they're really kind of taking folks at their word as they fill out that risk questionnaire. So
This kind of ties back into the beginning, one of the beginning slides when you talked about the IRP,
yeah,
because the
absolutely.
instant
What do those first
response is
steps look like?
basically your plan of what you're doing. And that's one of the first things a breach coach is going to ask you for. Where's your IRP? And then they're going to start going down that. And as soon as it starts finding holes in there, that just gave holes for the deny to happen. Because people need to understand who the breach coach is. Okay, let's define who the breach coach is. The breach coach is the legal counsel of the insurance carrier.
Yeah,
That's who you're
yeah,
talking to.
yeah. They're these lawyers who are specifically they handle breaches, law, breach, litigation all day long, right?
Yep.
And so there are these folks that the carriers really lean on for not only guidance but even assistance. And so, yeah, all of our customers will even get a hotline to our breach coach. We have a great relationship with one of the biggest ones in the country, Mullen and Conklin, and so all of our customers get a hotline straight over to them to give them a call. It's really important, just like we've been saying, kind of over and over. These things get very messy and fingers start getting pointed, so it's very important for folks to get under attorney-client privilege ASAP. It's one of the reasons if you go through my IRP or our IRP, you'll find after you finish it at the top, the breach coach will be like the first phone number you call, right? Get on the phone with the lawyers first, get everybody under attorney client privilege first.
I gotta give props to Gerard. I loved his last statement there. My thoughts after listening to this: instead of approaching cybersecurity as an expense, look at it as an investment, and that's truly what you're looking at if you
The
really
whole
do it.
goal of this. Yeah.
Exactly.
I
You really
love
did.
that.
So
Yeah, you
couldn't
wrapped
say it
it up
any better.
beautifully. Yeah. Couldn't have said it any
But
better.
Andrew brought up a couple of good questions here when we're talking about this piece here. What is more important to consider? Premium costs, limits, or the deductibles?
Yeah,
And that's a very interesting question going back to this slide right here.
yeah. Yeah, and it is about a balance, especially when thinking of the I kind of tuck deductibles and deductibles and the premium costs. That's kind of an internal discussion. Those really affect one another. So you can either typically find a policy with a lower premium and higher deductibles, or sometimes vice versa, right? So that's more of a internal. What do you guys feel you can handle in terms of cost? But the balance between you think kind of costs and deductibles under the same category in terms of dollars and cents, and then the limits, that's your coverage, right? And then thinking about what those tools and technologies, those requirements, that's kind of the three categories that all really need to be balanced
I
out.
think the
But
important thing to remember into those, because that's really looking to, if you think about the premium costs and deductibles, and then you got your limits, your cost limits, what they're limiting to those various things. To me, the first thing I want to make sure is, do I have all the areas of coverage? What is the things it's doing for me? Are they there? Now I can work to understand what I'm paying and what my deductibles are on that. Because if I just focus on there and don't look to see what all is it really doing, I could have a huge exposure that
yeah,
I'm not covered for and didn't realize it, thinking I was.
exactly.
So I think that's where doing the assessments, the free assessments of the policies you got to do for it to really go, well, this is what it's really doing for you. And based on your business, here's some things you need to consider that you're not covered for. Is that acceptable risk on your part? Is it acceptable to only pay those deductibles and the limits cost and all that when you're leaving this thing open? If you get hit here, what's the cost of that versus what you're saving? So
And it is
you got to
about
really
that
bring those
balance.
things to play and really think about that.
Yeah. And there is, there is, and as we, if we were to jump on Andrew, if this it was Andrew's first time looking, I would say there is definitely almost like a baseline, right? Like that, like MFA, offsite cloud backups, even like EDR that's going to open a big portion of the market, right? These things are, there is almost, you can see like a baseline, and then we kind of work with customers and what makes the most sense in terms of their budget to add other tools that might open up even more of the market, right? So you definitely first want to consider kind of the baseline tools and technologies, get those under your belt first, right? And then you really want to go out and do some of the shopping. That's actually exactly what this slide
Yeah,
basically says, right?
exactly.
Work
Coming in
with
there.
experts and advise.
Well, we've been talking. I just realized we're an hour into this, so
Oh my
I'm gonna
gosh, we
jump. Yeah,
are.
this has been fun. Um,
Yeah,
but yeah, well, this is some of the stuff we've been talking about. Make sure you get some good advice about what you're doing, having the right things in place to help mitigate your risk, and look at an insurance plan. And part of that insurance is get an analysis. Let's look. Reach out. Let's do that free analysis of what's coming into,
I was gonna say
and
this is
we
the
can get
slide
into that.
I wanna hammer home very quickly just
Yeah.
before people start jumping off. Yeah, I just noticed that too. Hey, always goes quickly when you're having fun. But this is the real, case study, right, guys? So this is what it can look like working with an expert, like Wayne, and working with an expert like Data Stream to go out and find the best possible option, right? So you can kind of get the imagery of, okay, this would be your original premium or some of the kind of lower tier carriers out there. Or do you get some of the extra tools and technologies in place that's ultimately going to open the doors to that better policies and better premium, putting you both in a more secure environment because of those extra tools you put in place, but also ultimately better insurance, right? With a better
Sounds cool.
process. So,
Yeah. Some of the case studies are coming in here, and this is kind of goes back towards what we was talking about earlier. We spent some time on is understanding the policy, but did I get the right policy? If I put the right things in place, I'm getting triple the coverage for the same price type thing, or
exactly.
even maybe less because some of them might even give you less because you got less risk. So this wasn't necessarily a discount, but it was what that person did to have a better posture to limit risk to get a better coverage. It's
Yeah,
basically what happened, right?
making sure you're getting credit, right? Making
Yep.
sure, because right now, working with, just that random broker, it's kind of a gamble that you happen to have a cyber insurance policy that is giving you the credit for the things that you are doing, right?
Yep.
And that's where the policy review can come into play, of
And I'd
course.
say questions and answers, but man, they've been great
They've been
questions all the way
cruising,
through.
yeah, really
We're
good.
3 minutes over. I mean, I think this has really been really good. And one of the things I plan on doing here, and I may reach out to you, get involved in it because it's going to be a little bit different aspect. There's a colleague that I met through one of my peer groups. He's actually does breach coach,
Hmm,
but from the client's perspective. So
really?
instead of dealing with the breach coach at the insurance company, they specialize in making sure they're helping from the client's perspective to make sure you're doing the right things to be able to do this to meet those requirements and make sure you're covered in
I would
those
be
things. And
interested in a
it's
conversation
interesting.
with him.
It's a
Yeah.
really interesting aspect. I thought it. Me and him sat down the first time we met. We're sitting there with everybody's like, "Okay, y'all got to shut up because we're about to start the meeting." We was having a blast talking. So but I want to talk to him and see if I can get him to come in, and we may have another follow-up discussion about this and dive a little bit deeper into the IRP side of it and what happens on the back end, because there was a lot of questions about that. So maybe we'll do that. John, I appreciate you doing this, bud, and again, and getting on with us. And I'm sure I'll see you here pretty soon. Trevor?
Absolutely, it's been a pleasure. I'll just drop my email down for anybody has any further questions. I just dropped it down in
Yep.
the chat. It's on the right
There you
there
go.
somewhere. So if anybody has any other questions, don't hesitate to reach out to me or Wayne. happy to answer anything. But yeah, thank you so much, Wayne. This has been so much fun. Always a good time jumping on
Sounds
chat
good.
with you.
And to everybody out there, y'all have a great day. And I'll see you again at the end of the month. Always on the last Tuesday of the month, we're having the webinar here. We're going to be covering something in, either in business, tech, whatever it may be. Join us again next time. We'll talk to you soon.
Bye, everyone.